This call is now being recorded.
Good morning, friends. Welcome to my session 2 on how to derive formulas for solving numerical problems on working capital management. So, in the last session, we spoke about different aspects of balance sheet. What are the liabilities side of balance sheet? What are the asset side of balance sheet? And at the time, we spoke about current liabilities and current assets. And subsequently, we talked about rather we discussed what is working capital, what is the formula for working capital, and we also had a brief understanding about different items of current assets and current liabilities. And in the subsequent stage, we spoke about and discussed the formulas for different uh, items of current assets and current liabilities, like the formula for finding out the total amount of raw material lying idle in the factory storeroom at any given period of time. As well, we spoke about the formula for work in progress, debtors, creditors, outstanding wages, formula for finding out outstanding overheads, and many other aspects. And finally, at the before the conclusion of the session, we derived the formula for calculating the raw material, the amount of raw material which will be lying idle in the stock room at any given period of time, and we derived the formula for that. So this was the numerical problem we solved, and then we found out the formula for finding out the calculation of raw material at any given period of time, and subsequently spoke about the amount of money which is outstanding with debtors at any given period of time, and we found we used this particular numerical problem to find out the answer to the formula of amount outstanding with debtors. Today we will continue the discussion and try to find out the other formulas pertinent to current assets and current liabilities. And the third formula, what we are going to discuss today, is value of finished goods. So until so far, we have seen raw material and debtors. Today we are going to talk about amount of money or capital which is stuck in finished goods at any given period of time, which is a current asset. So the third formula which we will try to derive is calculation of value of finished goods lying idle in the warehouse at any given period of time during the year. So, for example, you go to a manufacturing plant of Tata Motors, and subsequently, if you go to their warehouse where the finished goods are stored, so there is a huge inventory of finished goods which will be lying idle before they are sold to the end customer. So there is a huge amount of investments which is done in finished goods, and this becomes a part of your current assets and current working capital, and your capital is getting stuck in one of the current assets which is finished goods. So we'll try to find out the total amount of finished goods which are lying idle in the stock in the warehouse of a manufacturing plant at any given period of time, because that forms a part of our current assets. So I'm tentatively taking a small example and numerical example, and then we'll try to find out the value of finished goods lying idle at any given period of time. So let's start the discussion and derive the formula for it. Total number of units that are likely to be produced, are the budgeted amount of final goods which are going to be produced in the next year is 3600 units. So this is a hypothetical situation, a hypothetical example. So we are contemplating that we are going to produce 3600 units of a particular finished goods in the next year. So if you now, when I'm talking about finished goods, please remember finished goods are manufactured and they are stored in the warehouse before they are sold to the end customer. So they will be lying idle for at least a couple of days or weeks before they are delivered to the end customer. So when I am talking about finished goods and finished goods lying idle, means your amount is getting locked in finished goods. So amount which is getting locked in a single unit of a finished goods is, this is the formula. Cost of manufacturing the finished goods per unit, that is raw material cost, wage cost, factory overhead per unit, office and administration overheads per units, but not SDOH, because SDO, they are manufactured, they are not yet sold. To manufacture and to store it in the warehouse, what are the costs involved? So there are primarily only four costs, and here we have to exclude depreciation. So cost of manufacturing the finished product, number one. Number two is so in the cost of manufacturing the finished goods, you have to take the following items: raw material cost per unit, number one. Number two, wage cost per unit. Number three, uh, number three, factory overheads per unit, and office and administration overheads per unit. And this is the cost incurred for manufacturing the finished goods. This is the cost incurred for manufacturing the unit, a single unit of a product. So if you want to manufacture 3600 units, then you have to invest a capital or working capital of 3600 units into 100 rupees, that is 3 lakhs 60,000 rupees. 3 lakhs 60,000 rupees. So the total value of finished goods which are manufactured during the year are 3 lakhs 60,000. Number three. Number four is number of working days in the year. Number of working days in the year. Out of 365 days, the total number of working days in a year, I assume that five are non-working days, which are holidays, and the remaining 360 days are the days on which production is carried out. Production is carried out. Now, the assume the one of the basic assumptions of finding out the formula of any element of current asset or current liabilities is the production of finished goods is spread evenly throughout the year. So here, uh, what it means is I am going to manufacture 3,600 units during 360 days. So per day I am going to manufacture 10 units, and 10 units manufactured at a cost of rupees 100. So total amount which will be spent on manufacturing the finished goods is 1000 rupees. That is the meaning of it. So 1000 rupees per day. Cost of manufacturing finished goods per day is either this way you can find out, or the total amount of money which will be spent on manufacturing the finished goods divided by 360 days is equal to 1000 rupees per day. Now, so first point is over, second point is over, third point is over, fourth point is over, fifth point is over, sixth point is over, seventh point. Now, finished goods, once they are sold or once they are manufactured, they are stored in the warehouse before they are sold to the end customer. So they will be in the storeroom for a certain period of time. So your money gets stuck for that much period of time. So in this case, finished goods 15 days from the date of manufacturing, finished goods are sold 15 days from the date of manufacturing, and they are stored in the warehouse for a period of 15 days before they are sold to the end and final customer. So what it basically means that the finished goods will be in stock room or warehouse for at least 15 days before it is sold to the end customer. So 15 days, these particular goods which are manufactured are lying idle, and you have to find out the value of finished goods, the value of amount of finished goods lying idle at any given period of time in the warehouse. So, okay, I'm making a slide change in the PPT. Now, now whatever data is there, I'm showing them in a Excel sheet. So we have 7 columns: serial number, days, day one, day two, 360 days. The first day of the financial year is the third column. Value of finished goods manufactured for the day, means we have every day how much of the finished goods are manufactured. Date of sale of finished goods and sale of finished goods during the day, and this I will change it, amount of finished goods lying in the warehouse, so in the warehouse the finished goods are stored before they are sold to the end customers. So please remember this important point: 15 days. So once they are manufactured, after the completion of the 15th day from the date of manufacture, they are going to be sold. So let's take the first point. Serial number one, day one, that is 1st April 2014. We have manufactured during the whole day 1,000 rupees of finished goods, and this will be sold on the 15th, completion of the 15th day. That is 1 plus 5 is equal to 16th day. So until such time they are sold, they are kept in the warehouse, and there is no sales which has taken place in that day. So hope this point is over. Second day again, we are manufacturing on 2nd April 2014 another 1,000 rupees worth of finished goods, and this will be sold after 15th day, completion of the 15th day, that is on. So you add 2 plus 15, it will be sold on 17th of April. So until such time, neither this has been sold and neither this has been sold. So you have to add to 2nd April 15 days. We will sell it on 17th April. So until such time, for the last 2 days there is no sale. So the accumulated finished goods are 1,000 plus another 1,000 is equal to 2,000. Hope you have understood this point. Next one, on the third day, again you are manufacturing on 3rd April 2014, 1,000 worth of raw material, 1,000 rupees worth of finished goods, sorry, and this will be sold on 18th April after 15 days. So add to 3rd April 15, you will sell these goods on 18 April 2014. Until such time, during there is no sales because this is not sold, this is also not sold, this is also not sold. So the total amount of finished goods which are lying idle in the stock room is 3,000 rupees. So if you carry on this discussion like this up to 15th April, every day there is accumulation of 1,000 rupees of finished goods and there is no sales, and till the end of the 15th April 2014 there is a closing stock of finished goods to the tune of 15,000 rupees lying idle in the warehouse. Now the 16th day, let's see what's happening on the 16th day. 16th day we are going to manufacture, that is 16th April, we are going to manufacture another 1,000 rupees of finished goods, and this will be sold. Okay, there is a small correction. Okay, 23, 24, 25, this is 28, this is 29, this is 30, and this is 31st April. So this will be sold after 15 days. So add to this one 15 days. So there is not 30th April, sorry, it's on 1st May it will be sold. Okay, now this, what about this, this is 2nd May, so small correction, 2nd May, this is on 3rd May, this is on 4th May. Now let's talk about the 16th day, what's happening. So on the 15th day, at the beginning of the 15th day, 16th day, sorry, 15,000 of finished goods was lying, as we have already seen, Now on the 16th day, we are going to manufacture another 1,000 rupees of finished goods. So 15,000 plus 1,000 will be equal to 16,000. is equal to 16,000. But what is happening as far as this particular goods which was manufactured, which was in this 15,000 rupees, it will be sold. It will be sold on this particular date. If you remember, this was the date on which I am going to sell. So on 16th April, I am going to sell 1000 rupees of goods. So total accumulated till 16th was 15,000. We have manufactured on 15th another 1000 rupees. So 15,000 plus 1000 is equal to 16,000. However, on 16th April, if you remember, this goods which was manufactured on 1st April goes into the sales. It is moved from warehouse to the end customer. So you have to remove 1000 rupees. So I removed it. So 1000 gets cancelled and 15,000 is the amount of finished goods lying idle in the warehouse on 16th April. Let's carry on our discussion on 17th April. 17th April, I have manufactured another 1000 rupees. Another 1000 rupees. This will be sold on 2nd May. So 1000 rupees. So on that day, we are going to sell on 17th April. I am going to sell this particular finished goods, which has completed 15 days. So previously there was 15,000 worth of raw material. If you look here, 15,000 raw material finished goods. During the day, we have manufactured 1000, so 16,000 was the finished goods. And out of this 16,000, this one is going out for sales. So 16,000 minus 1,000 is 15,000. Now let's look at the 18th day. 18th day, the opening stock was of finished goods was 15,000. Our manufactured another 1,000 rupees. So 16,000 was the total amount of goods, finished goods we had at our hand. Out of these, on 18th April, we have already seen that 3rd April, whatever manufacturing, which is accumulated in the 15,000, so on 18th April, it will be sold out. So minus 1,000 rupees will go out. So 15,000 plus 1,000 is 16,000 minus this 1,000 rupees will go out. So the finished goods lying idle is 15,000. So if you continue like this, the amount of finished goods which will be lying idle in the warehouse at any given period of time is 15,000 rupees. Now, this is the way you can uh, understand the numerical problem of finding out the value of finished goods. Value of finished goods. So if you carry out this kind of a lengthy process, it's a time consuming and somewhere you will commit an error. So to overcome that situation, we have got a formula. We have got a formula. The formula is in front of you. The formula is, so you can have a formula like this. So let's look at the formula. The formula is, so the value of the formula for value of finished goods lying idle in the warehouse at any given period of time is equal to total number of units going to be produced in that year. This is total number of units that is going to be manufactured during the year into cost of manufacturing the finished goods. And this, remember, the cost of manufacturing the finished goods is raw material cost per unit, wage cost per unit, factory overheads per unit, office and administration overheads per unit. So overheads, cost of overheads or cost, total cost I will call it, or cost of manufacturing into number of days for which these goods will be lying idle in the warehouse, number of days for which these goods, finished goods will be lying idle, number of days for which the goods will be lying idle, divided by 360 days or 365 days or 52 weeks or 12 months. So we have already this kind of 12 months. So here let's solve the problem. So total number of units which I am going to manufacture during the whole year is 3,600 into cost of manufacturing the goods. I told you the cost of manufacturing the goods is 100 rupees. If you look here, the cost of manufacturing the goods is 100 rupees. So into 100 rupees into number of days for which the goods will be lying idle till they are sold, till the time it comes, till it gets sold to the customer, that is 15 days by 360, because I am assuming the number of days in a year number of working days near 360. So if you solve the problem, so 10, so it is 15,000 rupees. So in the previous slide also, we have seen that at any given period of time from here onwards, on an average, it is found that the amount of finished goods lying idle in the warehouse as far as finished goods are concerned is 15,000 rupees. Now, another way of it, of deriving, another way of constructing the formula is, so here when I'm talking about the first two parts, total number of units manufactured into cost of manufacturing. So this is 3600 into 100 rupees per unit. So 3600 into 100 is 3,60,000. This is nothing but 3,60,000 into 15 rupees, sorry, 15 days by 360. So 3,60,000 is the total cost of manufacturing the finished goods. So value of finished goods manufacturing during the whole year into finished goods are sold after 15 days from the date of manufacturing divided by number of working days. That is 3,60,000 into 3,60,000 into 15 days by 360 days is another way of deriving the formula, which will give you 15,000 rupees. That is the amount of finished goods lying idle in the warehouse before they are sold out to the end customers, 15,000 rupees. Hope you understood this particular problem. So this is the way we can derive the formula of finished goods, value of finished goods lying idle in the stock room or warehouse or in the manufacturing plant at any given period of time. Next one is, now we have seen some current assets, the formulas like raw material, finished goods, and debtors. Now let's look at some items of current liabilities and let's look how the formula can be derived. So one of the first current liability is creditors, and we'll find out the way to uh, derive the formula for the amount of money which we have to pay at any given period of time to the creditors. So let's look upon this particular aspect. So here the calculations of amount to be paid to creditors at any given period of time. So we have to pay as a manufacturing unit. This is the liability, and this liability is a current liability, and this current liability has to be paid at the earliest. So what is the amount of money which we have to uh, which are outstanding as we have purchased the raw material on credit basis at any given period of time? What is the total amount of money which you have to pay to creditors at any given period of time? So calculations of amount to be paid to creditors at any given period of time. So please remember, creditors are formed because of credit purchases of raw material. So raw materials comes into picture. This raw material comes into picture, and creditors are formed because of credit purchases. And once you have purchased, you will pay after certain period of time, like 10 days or 15 days or 20 days. So creditors is opposite of debtors. Debtors are formed because of credit sales, and creditors are formed because of credit purchase of raw material. So let's take a small numerical illustration to derive the formula for creditors. So this is creditors are also called as accounts payable. So this is our motive calculation of amount to be paid to creditors at any given period of time. So why this any period of any given period of time? Because as a business entity, we are a dynamic business entity. We are having continuous production. We are continuously purchasing raw material, and we have a long-term relationship with the creditors. We keep on purchasing raw material. We keep on paying money, and there will be outstanding of credit outstanding money which we have to pay to the creditors. So at any given period of time, on an average, what is the total amount of money outstanding to the creditors because we have purchased raw material on continual basis? So what is why we owe money to creditors? Because we have purchased raw material. So please remember, raw material comes into picture in the formula. So we have taken a hypothetical example. Total number of units to be manufactured during the whole year is 3,600 units. Now, I told you raw material is the one which has been purchased on credit basis, and that is the reason we have creditors to whom we have to pay money, and amount is outstanding. So, cost of raw material incurred for manufacturing per unit. What is the cost of raw material incurred for manufacturing per unit. It is 100 rupees. So I am manufacturing this many number of units. For manufacturing one unit, I require 100 rupees. So the total amount of raw material which I have to purchase from the creditors during the whole year for the manufacturing of 3600 units on credit basis, that is on credit purchases, is 3,60,000. Number three. Number four is I'm assuming that there are 316 working days in a year and 5 are non-operational days. So this production of 3600 units will be spread evenly on 360 days basis. So another assumption of this particular situation is production of finished goods is spread evenly throughout the year and raw material is purchased on credit basis evenly or equally. Okay, this is number five. Now we have to find out what is the raw material which has been purchased on credit basis. So this I will change. There is a small change. Cost of raw material purchased per day, purchased per day on credit basis. Credit basis from creditors. So we have purchased on a daily basis raw material from the creditors, and we will find out what is the per day purchase. So this 3,60,000 of raw material is purchased over a period of 360 days on credit basis. So per day, the total amount of raw material which is purchased on credit basis is 1,000 rupees. So every day I have to purchase amount of raw material 1,000 rupees, and which will be paid after certain days. This 1,000 will be paid after certain predetermined days. So let's look at how many days is allowed by the creditors as a credit period. So payment towards raw material purchased on credit basis is paid after 11 days. So today I have purchased, that is on one first I have purchased, I will pay it on completion of 11th day, that is I will pay it on 12th day. So that is the meaning of it. So 1,000 rupees is outstanding on the first day. Second day also another 1,000 rupees. So let's find out what is the total amount of money outstanding to creditors at any given period of time, and creditors are formed because of credit purchases. So let's solve the problem. So on the 11th day, okay, this is on the 11th day I'm going to pay. This you can, so he is allowing 10 days. That is the meaning of it. Okay, hope you have understood this. So let's solve the problem. Let's solve the problem. So after the completion of the 10th day, you have to pay it. So on the very first day, I purchased 1,000 rupees of raw material on credit basis. That is on 1st April 2014. I purchased 1,000 rupees of raw material on credit basis. Have I paid anything to that person from whom I purchased? No. So how much I owe to him? 1,000 rupees. On which date? On 1st April. So when I'm I supposed to make the payment of this 1,000 rupees, I'm going to make the payment of this 1,000 rupees after the completion of the 10th day. That is on 11th April. I am going to pay. On this date I have to pay. Hope you have understood this. On 2nd April also again I have purchased on the second day 1,000 rupees of raw material, and this amount of 1,000 rupees of raw material is purchased on credit basis, which will be paid to the creditor on 12th April. So on this date I am going to pay. So until such time I have to pay this 1,000 rupees which I am purchasing for the first day, and 1,000 is already there plus another 1,000 I am purchasing. So total 2,000 I have to pay. Now third day again I have purchased 1,000 rupees worth of raw material. I am going to pay this on 13th April here. So until such time it is not paid. So the total accumulated amount of money which I have to pay to the creditors on the third day end is 3,000 rupees. Similarly, on the fourth day, again I have purchased another 1,000 rupees of raw material, the payment of which will be made on 14th April. So already the outstanding amount which I have to pay is 3,000 plus another 1,000 rupees is equal to 4,000. So this is on the fourth day. Fifth day, again I purchase a raw material worth of 1,000 rupees, the payment of which will be done on 15th April. So total accumulated payments to be made is 5,000 rupees because of purchase of raw material on credit basis from creditors. Now, similarly, if I go on the ninth day now, straight away, hope you understood. On the ninth day, again, I am purchasing another 1,000 rupees, which the payment of which will be made on 19th April. So, until so far, how much gets accumulated? Now, 9,000 rupees, because we have not made a single payment till ninth day's purchase on credit basis. On 10th day, again I am purchasing 1,000 rupees of raw material worth on credit basis from the creditor. The payment will be made on 20th June. So somewhere like this. Now the amount which is outstanding to the creditors is 10,000 rupees. So this is 10,000 rupees. Now look at the 11th day. 11th day, the total outstanding was 10,000 rupees. I am purchasing on the 11th day again 1,000 rupees. So 11,000 I am having to pay. But what is happening? I have told to him that whatever I have purchased on 1st April, I will pay it on 11th April. So I paid 1,000 rupees. So this much I have to reduce. So outstanding will be here 10,000 rupees. Okay, you can change it 10,000 rupees. Okay, this is 10,000 rupees. So okay, 11 days. No, so 11,000 rupees is getting accumulated. So I am assuming that it is 11 days time. So if you carry on the discussion like this, again, if I look at the 12th day, again I am purchasing another 1,000 rupees of goods on raw material, that is raw material on a credit basis, and the payment of second days will be paid on 12th day. So 1,000 rupees you can deduct, and thereby your outstanding amount which you have to pay is 11,000 rupees. If you continue like this, you will find that at any given period of time you have to pay 11,000 rupees. This is the amount which is outstanding, or the total amount of creditors amount which you have to pay, amount outstanding to creditors. So doing this a lengthy kind of a calculation is a very lengthy, laborious, tiresome, and boring process, and it may sometimes even yield wrong results because of lack of concentration. So, in place of this, you can adopt a formula. The formula is amount of money outstanding to the creditors at any given period of time is given by the formula total units to be produced during the year, total number of units produced during the year, into cost of raw material per unit, into payment, how much of time taken to make the payment to the creditors, and total number of years in a total number of working hours or days in a year. Sorry. So the first one, total number of units to be produced is 3,600 units into cost of raw material per unit is equal to 100 rupees, as already told, into payment will be done after 11 days, means uh, it will be done on the 12th day. Okay, there was some slight change. Okay, you please overcome that, divided by 360 days. If you use this formula, you will get the same result like 11,000 rupees what we got. So if you solve this, 3,600 into 100 rupees per unit of raw material purchased into 11 days of credit period allowed by the creditors by 360 days. So that is number of units produced during the whole year into raw material cost per unit, which is purchased on credit basis per unit, into 11 days is the time allowed by the creditors by 360 days. If you solve this, you will get 11,000 rupees. That is the amount of great amount which is outstanding to the creditors at any given period of time. Another way of solving the problem is, if you look here, if you multiply this part, it is nothing but 3 lakhs 60,000. 3,600 into 100 rupees is 36 hundred hundreds. That is 3 lakhs 60,000. 3 lakhs 60,000. So this is 3 lakhs 60,000 is nothing but the total amount of raw material purchased during the whole year for the manufacturing of 360 unit 3,600 units into 11 days is the time period allowed by the creditor by 360 days. That is number of working days in a year. So hope you got the answer to the first element of current liability under working capital, which is credit costs. In a similar fashion, now the second item of current liability is factory overheads or selling and distribution overheads or office and administration overheads, or you can total them to total overheads. So wherever you can use the same formula, but in the formula wherever overheads are there, you either use factory overheads or selling and distribution overheads or office and administration overheads and selling and distribution overheads and total overheads as given in the formula. Okay, so if I derive one formula, automatically that formula will be used for all these four put together, even including outstanding salaries, and similar items, because this is an overhead. This is an selling and distribution overhead is a overhead, factory overhead is a overhead, office and administration overheads is a overhead, and you just place them total, you will get total overheads. In the same way, you wherever salary is there, you replace the formula. Wherever salary is there, you replace the factory overheads by salary or so on. So let's take a small example of finding out calculation of amount outstanding to factory overheads, or means you can replace factory overheads with manufacturing overheads or office and administration overheads or selling and distribution overheads or outstanding wages or outstanding salaries. So similar. So same kind of same formula, only you have to change the type of expenditure which is in place. So we have here the total number of units. We have taken a hypothetical example, the hypothetical example to derive the formula for finding out outstanding overheads, outstanding factory overheads, outstanding office and administration overheads, outstanding selling and distribution overheads, outstanding wages, so on and so forth. Okay. So total number of units that are going to be manufactured in the year, hypothetically or budgeted 3600 units. Now here, look here. Cost of factory overheads. Cost of factory overheads per unit. If you want to manufacture 1 unit of a 1 unit of finished good, what is the factory overhead per unit? In the similar way, factory, if you are asked to find out office and administration overhead, cost of office and administration overheads per unit incurred for manufacturing. If you are asked to find out selling and distribution overheads formula, replace it with cost of selling and distribution overheads per unit. In the same way, if you are asked about wages, cost of wage cost per unit of finished product, cost incurred for manufacturing one finished product. So in this case, to manufacture, the cost incurred as far as factory overheads per unit is 100 rupees. So if you want to manufacture 1 unit of the finished product, for example, I'm manufacturing a table, study table, then the cost incurred as far as only I'm talking about factory overheads. I'm not talking about raw material. Raw material is different, wages are different, factory overheads are different. So I am now finding out overheads, factory overheads. So factory overheads, it can be factory rent, it can be factory salary. So once you rent is incurred, you will not pay on the same day, you will pay after 30 days. Or salary incurred today, you will not pay it on the same day, you will pay it off after 30 days. So that is called as outstanding. So we are finding out at any given period of time what is the total amount of outstanding factory overheads or selling and distribution overheads or wages or salaries or any expenditure of that kind or office and administration overheads at any given period of time. So I'm assuming that per unit the factory overheads is 100 rupees. So the total cost of factory overheads incurred to manufacture 3600 units is 3,60,000, because to manufacture 1 unit it is costing 3600 rupees, sorry. To manufacture 3600 it will cost 3,60,000. Now number of working days in a year. Number of working days. Okay, 5 days for holidays, then the rest 360 days are working. So this much of goods, this many number of goods are produced over a period of 360 days. So 10 days per 10 units per day, sorry. So into 100 rupees. So daily the cost incurred as far as factory overheads is 1,000 rupees. Or the other way is 3,60,000 is the total factory overheads for the whole year divided by 360 days is equal to per day the total factory overheads is equal to 1000 rupees. So if you want to find out the formula for outstanding office and administration overheads per day, or for what is the outstanding overheads at any given period of time, just replace factory overheads by office and administration overhead, and similarly selling and distribution overheads, and similarly wages and all pertinent outstanding expenditures. So factory overheads per day we have found out. Now lag in payment of factory overheads. So factory overheads is equal to 20 days. That means factory overheads incurred today will be paid after 20 days. So after, for example, first day we have incurred an amount towards factory overheads. It will be paid on completion of the 20th day. So probably on 21st day we are going to pay. So until such time 20 days, this amount gets outstanding for at least 20 days. So we'll find out what is the total amount of outstanding factory overheads at any given period of time. Any given period of time. Okay. So this is a pyramidal presentation of amount of money outstanding. Sorry, this headings you can change. I have not forgotten to change it. Sorry. So factory overheads at any given period of time. Okay. So on the first day, that is on 1st April, I have outstanding. I have factory overheads of 1000 rupees, and I promised that I will pay after 20 days. That is on the 21st. I'm going to make the payment. Payment will be made on the 21st day. That is on the 21st April. Have I made any payment to the person to whom I have to pay factory overheads? No. So this is not paid. So what is the outstanding factory overheads on the very first day? 1000 rupees. On the second day, on similar lines, 1000 rupees is incurred, which I will pay it on 22nd, so 2000. On the third day, another 1000 rupees, which I will pay it on 23rd. After 20 days, 3000. So similarly, for 18th day, I have incurred factory overheads of 1000 rupees, which I will pay it on 8th April after 20 days. So on 18th day, accumulated factory overheads, outstanding factory overheads, 18,000 rupees. Now let's talk about the 20th day. 20th day, another amount, another 1000 rupees of money has been spent on factory overheads, which I have not paid, which will be paid on 20 days later, that is on 10th April. Okay, until such time I have not paid anything towards factory overheads. So on 19th day here, sorry, the accumulated outstanding factory overhead is 19,000 rupees. Now let's talk about 20th. 20th, another 1000 rupees of money or expenses are incurred for factory overheads, which I will pay it on 10th April. So this was previously 9th April, sorry. So which I have not paid, and the previous ones also are not paid, because the previous ones will be paid after 20 days, completion of the 20th. So the accumulated outstanding factory orders is 20,000 rupees. So until so far you have understood it. Now look at the 21st day and look this date. Has it appeared here? Yes, it has appeared here. So 21st again, the outstanding wages, outstanding factory orders were 20,000 rupees, and another 1000 rupees has incurred on the same day. So 20,000 was incurred. However, on this day, I promised that out of this, 1000 rupees will be paid. 1000 rupees will be paid. So I have paid 1000 rupees. So now the outstanding wages are 20,000 rupees. In a similar fashion, if you carry out the discussion and calculations at any given period of time, the amount of outstanding factory overheads at any given period of time during the year will be 20,000 rupees. For example, on the 22nd day, so outstanding such time was 20,000 plus another 1000 rupees was incurred, that is 21,000 has incurred till so far, which has not been paid. However, on 22nd April, it has been found that 2nd April's amount will be paid, which is 1000 rupees. So outstanding amount becomes now 20,000. So if you carry on the same calculations in similar fashion, the one which I have just now discussed. In the similar fashion, you do it at any given period of time. The amount of outstanding as far as factory orders are concerned is 20,000 rupees. So you can't carry this kind of calculations like this because it's a lengthy process. So instead of that one, we will find a suitable formula which addresses our problem. So to find out the formula for finding out the formula for factory overheads at any given period of time, that is manufacturing overheads and so on and so forth. So just replace this names. Total amount of units, total number of units to be produced during the year. The formula is started. The first one is total number of units that has to be produced during the year. Cost of factory overheads per unit in incurred for manufacturing. Lag in payment of into lag in payment of factory overheads divided by number of working days in a year. So if you look carefully, total number of units produced during the whole year is 3,600 units. Hope you remember this. Into cost incurred as far as factory overheads are concerned per unit manufactured of finished goods manufactured is 100 rupees. To manufacture one unit, you require to spend 100 rupees of factory overheads per finished goods. Into number of days later, you are going to make the payment. You are going to make the payment after 20 days. So on 20 days time is given divided by number of days in a year is equal to 360. So if you calculate, you will get 20,000 rupees. So instead of doing a lengthy process like this is the way you can derive the formula. So another formula, if you look this one, this particular part, this is nothing but 3,600 into 100 rupees. 100 rupees is the total factory overheads per unit. So to manufacture 3,600 units, you will get 3,60,000, which is total factory overhead. So you can just replace this one with total amount of factory overheads incurred for manufacturing of 3,600 units, that is 3,60,000 into lag in payment of factory overheads, that is 20 days by 360 days, that is the number of working days. You get again 20,000 rupees. So these two formulas can be used. So this particular in similar fashion, you can find out just you have to replace outstanding factory overheads with outstanding manufacturing overheads or outstanding production overheads or outstanding office overheads or outstanding administration overheads per unit, outstanding selling distribution overheads or outstanding total overheads or outstanding wages per unit or labor cost per unit, and you will get the same kind of results. Hope this session is very fruitful to you, and I think I assume this is a learning experience. It's a experience sharing with you guys. So hope you have understood the concepts. Hope you have understood the way the formulas can be derived. Thank you so much for your patience listening.